Tech in. John says, thanks for the webinar series. You're welcome as always, John. John's a long-term member of the Pattern Trader and a great supporter, so thank you for that. Alio, hello. Valentine, Ej, Swapan, how you doing? Stephen, Accentra, how you doing? Natalia, also a longtime supporter. We have Sunil, hello. Gary, Obaid, David, John from New Zealand, 10:27 a.m. Try not to keep you up past your bedtime there, John. Ralph, I'll put my video up in a minute. Believe me, I've got a face for radio, so I just put the video up there. There you go. Scott, I've got Rob, TC, Zigmars, you're welcome. France, Courtney, Alio, Sunil, Vladimir, Mihai, Vic, Wieslaw, Graham from Sydney, another Aussie. Got Dave from Haiti. So we've got quite an international crew here. John, Usha, I'm not even going to attempt that. I'll just call you Ushe. Is that all right? Garvin from London just joined the LEAP program. That's one of our programs. We'll talk about that over the week. So tons of people. I'd like to say hi to everybody, but then I just spend the whole time doing that. So, hey, everybody. We'll start in 12 seconds. So just kind of clear my screen here, get my thoughts collected. It was a crazy day today. All right, so I'm going to share my screen. So welcome to today's webinar. This is a 4-day live trade execution webinar series. So sometimes I always get the question, is this live? It is live. This is in real time. I've subtitled this little get together, how to capitalize on the monster moves in the markets. And my name is Mark Shaws. I'm the Pattern Trader. So just trying to collect myself. I am a trader first. I started this education service about 5-6 years ago, late 2016, I think it was. How time flies. And it was really, to give back. But, my full-time job, I've been trading for decades. I still am a very active trader. And today was very active in the stock markets. I've been hugely active in the US stock markets, going short for the last several weeks. And today we had kind of a counter trend rally. I'm trying to sort out, if this is real or not. And I'll talk about all of that. But I guess before I kind of dig in, I'll just do a brief introduction. Now, some of you on here have, seen this portion many times. But if you're new, let's see, we have upwards of 199 participants and counting. So welcome again to this live trade execution. So I'll just give you a kind of a brief background on myself and my journey, how I ended up here. I started trading as far back as I can remember. I was a kid in college. I was in my junior year. I was attending one of the best business schools in the United States, University of Southern California. It was a private school. People are really killing themselves to get into that school today. I don't know why. I didn't learn a thing there. But I went to, USC Business School. And, in my education, I was being taught how to evaluate investments based on their fundamental merits. Fundamentals are an evaluation of all of the metrics of an investment. You try and break it apart. So if you're looking at a company, you're looking at a price earnings ratio, you're looking at a sales turnover, you're looking at management, you're looking at balance sheet items, you're looking at projections, on and on. If you're looking at cocoa, you're looking at import, exports, currencies, things of that nature. So that's called fundamental analysis. And that's what I was being taught. And then right around, I guess, my junior year, my second to last year in college, my father was doing business with this investment banker. His name was Graham Loving. A name you can't make up. Graham was a very idiosyncratic character. He wore an eye patch over one eye. He looked like a pirate. He was an intellectual, very quiet spoken, but was a very powerful intellect. And so on the side, when in addition to his job as an investment banker, Graham was also actively trading the commodities futures markets. Now, I hate to admit how far back this was, but this was in the late 1970s. And for those of you who don't have memory of that time frame, it made these markets look tame by any measure. This was the first time that interest rates went to 21%. Inflation was over 10%. You had 2 oil embargoes in the 70s. Gold ran to over $1,000. Silver was over $50 at that time. Pork bellies, orange. So Graham was trading about 20 of these exotic markets: cocoa, orange juice, live hogs, soybean meal, soybeans, wheat, corn. I mean, I couldn't, keep, handle on one, never mind 20 balls in the air. But, this is what fascinated me. Graham was making a ton of money, trading these markets. In fact, I think we're talking about 1978, 1979 timeframe. My dad put in 50,000 and Graham put in 450,000, and they started this account with $500,000. And by the end of the year, it was at $5 million. Now that's back when $5 million was some money, but it was a lot of money in the 70s. And, so I was fascinated not only on how much Graham was making, but how he was doing it. So it was, in complete contradiction to the way I was being taught in school. Graham was looking only at the price of these markets and making decisions on buying and selling these markets only on the price action. And we call this technical analysis, where you only look at price and what have you. And so it was from my early introduction to looking at markets from price that I evolved what, I'm going to share with you at the Pattern Trader. And so, Graham would just basically take out a very simple piece of graph paper. This was in the days before the internet, the days before fancy charting services and the internet. And so he would just take out a piece of graph paper and plot an X and Y axis for time and price. And every day he would plot the closing prices of live hogs and soybean meal and T-bond futures and what have you. And he basically said, Mark, I simply want to buy a market that's going up or sell a market that's going down. And to my very simple intellect, that really had a giant appeal. And I'm a very visual person. And so I started, a very intensive study of price action, price patterns that continues to this day. To me, the markets fascinate me. I kind of look at the movements. I look at how these bars stack one on top of the other and try and, determine from those bars and that price action, what the trajectory, what the direction, the future direction or path of that market is going to be. And so this is a methodology that you can effectively apply to any trading market that has a high, low close. So I trade all of the currency markets. I trade oil, I trade gold, I trade all of the stock market indexes. And basically I have a 4-step trading methodology that, and perhaps before I go any further, I don't know if my team sent it to you, but I'm going to just put it into the chat box here. And this should have been sent to you ahead of time. But before I do that, I'm just going to pluck that there. Dwight, if you could put that into YouTube also. So this
Perfect.
is effectively my 4-step trading methodology, which then we found out was actually scientifically verified and backed up. At one point I was just really curious. I was making a lot of money, but I was wondering if there was any kind of backup or verification of this strategy. So I kind of tasked my team to, do a deep dive, and they spend weeks and months kind of digging up all of these, kind of esoteric scientific journals. And it really did show that once these patterns are established, that for at least 100 days after a pattern has been established, the market will move in a certain direction. So if a market has made a double bottom, then, by virtue of it making a bottom, it will go up for at least 100 days beyond that. Now, one of the big markets that I've been speaking about on probably every one of these webinar series. If you attended the webinar series before this, like 3 weeks ago, I talked about this pair. And then if you attended 3 weeks before that, I talked about this pair. And it's the British pound versus the New Zealand dollar. Now, this is a market that put on a double bottom and has gone up, every week since I put on these webinars. And I'm making a monster amount on the pound versus New Zealand, a very esoteric, exotic trading pair that nobody would ordinarily look at. But I hone in on patterns, and where I see opportunities, I don't care what that market is. And I'll put that in a moment, but I'm just trying to kind of give you a background that you can apply this analysis to any trading market. Once you see these patterns, they typically have a pathway forward. Now, it's not as easy as that. The market does everything it can to shake out the leaves, shake out the weak hands. But to my mind, it's trusting the patterns. And, it's a very apropos discussion today because the NASDAQ made a huge move. It went up 3%. And I don't think this is a real move. I don't think that this move will sustain. I mean, we've had a huge upward market, and now we're, now it looks like the markets are continue going back up. But this is where, it gets a bit dicey. And I'll share with you my thoughts. So I basically have a 4-step trading plan to get me in the market. And it's not about being perfect. It's not about making money, every time. In fact, what I'm going to share with you is that, again, if you look at the subtitle here, it's subtitled How to Capitalize on Monster Moves. So I am currently ahead 1,200 pips in the pound versus New Zealand dollar. So I'm not stuttering. I said 1,200 pips. So most people in the FX market are trying to carve out 7 pips or 15 pips or 20 pips or what have you. But I get all kinds of people on my review website saying, Mark, before I met you, I never made 100 pips on a trade. Well, I don't enter an FX trade unless I have a pathway forward to make 150 pips. And once I do, I don't just dart in and out. So I've been sitting on this pound New Zealand trade since late November, and I'm up 1,200 pips. And it's not like I'm rushing to get out of that trade. I'm making hundreds of thousands of dollars. And frankly, to me, I'm looking for places to add to that trade. So this is the difference of, I think, what I share and what I do versus what you're being, told elsewhere on the internet. So with that said, I'm just going to, show you what I do every day. I'm in the market. I'm active. I'm going to show you, all my mess ups. This is real time. So I'm going to show you my gains and my losses. And away we go. So welcome to the 4-day trade execution webinar series. I'm going to begin by sharing with you, this is my broker statements from today. So I have what I call put options. This is a very leveraged bet on this index, the IGV, going down. And you can see that I'm getting my hat handed to me. I'm losing 20 grand in this account and probably a whole lot more in this account, and I've got a bunch invested. So I invested $35,000 in this account and $57,000 in this, and it can all go bye-bye if I'm wrong, because these are very leveraged options and they expire worthless if you're wrong. So I've got 2 weeks. I've got till the 18th for this thing to work out. It's the IGV. It's a technology stock index, and I'm betting that it's going to go down, even though it had a huge up move today. And we'll see. I mean, I could really get my hat handed to me. And then at the close, I bought some Alibaba, BABA. I bought some at 124.89. And then I also bought some JD. And I'll kind of share with you why I did that. These are my open FX positions. So I've been in the pound New Zealand pair forever, making 189,000 on this, 183,000 on this, 34.47 respectively. Then I'm also short the euro yen, making a little bit there. I'm short the pound yen. I'm losing that there. I shorted some gold. I'm making that. And then I'm also short the Dow Jones and losing some money there. So this is the setup that started it all in the British pound versus New Zealand dollar. And I'll throw up the real-time chart in a moment. But what I want to share with you is that this email was sent out November 22nd in the afternoon to the members on what we call our elite program. Our elite program is, I send out an email every day with, high risk, high value trading opportunities. But, most people will trade on, focus on in this discussion, what was the trade? Did it make money? Did it lose money? But really, I started the Pattern Trader with the intent of educating. So really what I'm trying to do is show you on the chart what I'm looking at. And then I also do a discussion of what I'm looking at on the chart. And so whether we win or lose, prices are repetitive, patterns are repetitive. And if you see this pattern now, and then you see it again in a corn chart or an IBM chart or something else, you can assume that it will have the same ramifications. So the more you see this, the more you understand even the losing trade. So just like anything else, I learn more from my losers than my winners. But in this case, this was a huge winner. So you can see this is, what was on the chart. It was an inverted head and shoulders. This is a bull price pattern. It's really an upside down looking man and woman. And again, I will throw this up on the live chart in a moment. But you can see I had a recommendation to buy it on a buy stop. So this is a resting order that sits above where the market closed. I require the market to confirm me as one of the 4 steps of the trade execution strategy. And in this case, the trade was clicked in at 192.77 and it's still alive. And right now we're trading at 204.5. So this thing is up 1,200 pips since this was sent out 2 months ago. And you can see I had a stop loss of about 140 pips. And I'll talk about risk management tomorrow. So people will say, well, there's no way I could take 140 pip risk on a trade. And it's absolutely true. If you do your normal trade size, you probably couldn't. But I'm going to show you how to adjust your trade positions to take advantage of these bigger moves. So in my analysis, I said pound New Zealand has formed a short-term inverted head and shoulders. This should be a bull. So that was a typo there. It's a bullish price pattern, penetration above the inside day bar, which is one of my insurance day bars, suggests there could be a chance of a healthy move higher from current levels. And then you can see once this got underway, I added to my position. I said I'm currently long pound New Zealand at 192.77. Again, that should be on 11.23, not 12.23. Sorry, I'm just going to get rid of this distraction here. And I talked about the long-term double bottom, the inverted head and shoulders, on and on. And I said, pound New Zealand has been banging on the door of the 2000 price level. This time, I think it sails through like a knife through butter. And here we are at 204.5. So it did indeed sail through that 2000 area as predicted on early in January. So this was sent out January 5th. You can see this was the outgoing email. And here are my open profits in pound versus New Zealand dollar. You can see it's trading at 204.30 now. And so these are open profits. They'll go up or down with the live market every day. I don't have any intentions of getting out. And so we'll see how that goes over time. So on my last webinar, I talked about this stock, and I'll go back to the pound New Zealand chart in a moment. I'm just going to flip through a couple of my trades just to give you a flavor of, what I do. And, if you do it right, it can work in your favor. So I was buying these calls. A call is a bet on the upside of any instrument. In this case, the stock was JD. I actually bought some more stock today in this stock JD. And you can see I bought these calls at $1.25 and I blew them out 300% higher and made a 340% profit in one day. Now, this is what you can make in options, but you can also lose everything. So this was also another account where I also bought these JDs at $1.15 and blew them out at a 360 and 375 and made about 326% in one day. In this case, it totaled about 150 grand in profits. This was about a year ago. I remember this trade very well. I know it was about exactly a year ago because I was getting surgery at the time and I was recovering, and I was saying, well, I can't really trade. I don't want the stress, but I just saw this trade and it was just too good to be true. And this was in the stock of Lyft. And I bought this stock. I told our members to buy it. And then I also disclosed that I was long the stock and the $46 call options. I was also long the $47 call options and made a huge amount of money buying the stock at 45 and blowing it out at 58 and making all kinds of money in the stock. And then here you can see I was buying the options at 92 cents and I blew it out for $7. So I made over 700% in that. And then I bought these call options, the 47s at $1.10 and blew them out at 6 and made about 600% and made about $250,000 in about 10 days on that little, purchase there. This was a bear pattern that I saw in the NASDAQ last February. And it was on a Friday, I remember very well. And ended up buying some put options. Again, a bet on the downside in the QQQs. I bought whatever it was, 300 of these, which was about a $35,000 bet, and ended up making 195 grand on that bet in 2 days, or 600%. So I bought the put options at $1 and they went to 585, 570, 600, and some at 8. So I made like 800% on those. So this is what I do. I'll go through some of my other trades, each day. Now that I've touched on a few markets, I'm going to talk a little bit about that. So really what I'm trying to get across today is the madness behind the whole thing, the gestalt of, so you guys will all, during the presentation, while I'm presenting you, say, well, can you look at this chart and can you look at that chart and can you look at that? The whole thing is to understand what, I'm doing and what the approach is. And then you can apply this. There's thousands of markets we can look at. And so I'm going to try and look at 2 or 3 markets every day. We can have a bit of a discussion. But the idea is for me to try and convey the thought process behind, what I'm doing. So, when you open up a chart, so this is the pound versus New Zealand dollar, kind of a crazy pair, and, looks like all over the place. So, when you look at this chart, you go, well, this is really a coin flip. This looks like it could go up, it could go down. It's like, this is just a very sideways market. But, buried within this sideways market, and actually let me back up because I'm leaving off an important portion here. So every chart tells a story, tells a narrative. And from that narrative, we then try and deduce what the trajectory is going to be, what the direction is. What I'm trying to do in my trades is take a piece out of the middle, out of very large moves. So this is, again, contrary to what most people are doing. Most people are looking at 15-minute charts, very short term, 15-minute, hour, 4-hour, whatever it is, and then try to snatch out 20 pips here or 50 pips there. But what I'm trying to do is take pieces of big moves. So these are, 800 pip moves. And if I can take 300-400 pips out of the middle of these kind of moves, that's really what I'm trying to do. Because, again, if you're in and out of the market trying to snatch, 10 pips here and 10 pips there, if you're trying to, get a 15 pip move, you also have to risk 10 or 15 pips. Then you also have to overcome the broker spread of 2 or 3 pips. And, that makes it a very dicey game. So that means for every increment that you're trying to gain, you're also risking that. And then you got to fight with the broker. And this is ultimately a losing game. It's not my opinion. If you just look at the statistics, especially of the Forex business, 90% of people are losing their money in the first 3 months. I think it's actually a lot higher, because really you have a one-to-one risk reward outcome here. So this is like going to the craps table. So, you put your $25 chip on the table and you either win $25 or you lose $25. And I don't care if you win 10 hands in a row, unless you get up and take, your 250 bucks. If you stay there till 4 a.m, the casino is going to end up with your chips in their pocket. And it's the same thing here. The brokers are going to end up with your chips if you are just in and out like this. So my whole thing is that unless you have a strategy that will get you 2, 3, 4, 500 pips, in this case, I got involved here in the pound New Zealand, and now it's here. I'm making 1,200 pips on this trade. And so all you need are one of these trades a year to make your entire year. So it's not about how many losses, how many wins. It's what is the quality of your wins versus your losses. And so what I try and do, instead of a one-to-one risk-reward relationship, I'm shooting for at least 3-to-1. Meaning that if I'm going to risk 50 pips on a trade, I want to see a pathway where I'm going to make at least 150 pips. And every once in a while, you'll bag a trade that makes you 4, 5, 8, what have you. Once a year, you may bag something for 1,000. And that obviously makes up for a lot of losers. So if you set up your trades with a 3-to-1 risk reward ratio, even in the stock market, so let's say you're risking $5, but you're looking to take 15 bucks, that is a 3-to-1 risk reward. So it really doesn't matter if you lose, because the one time that you win makes up for 3 losses. So the math will actually show that you can lose 72% of your trades and still be a winner if you have this. So trading is also about math. People think, well, it's just about getting in at the right place. No, it's a lot of things. It's risk management, it's discipline, and it's really about math and setting up trades with a certain outcome, a certain expectation. And if you're trading on short-term charts, 5-minute charts, 10 minutes, and your outcome is not big enough, it's just a question of time before you get chewed up by the market. If you're looking for 15 pips or 40 pips or what have you, you will eventually get carried out. It's just the way it is. And so what I try and do is look at big picture globally, long-term, to see what are the bigger moves in the markets. So what you'll notice on this chart is that I just have price and time. There is no volume, there's no moving averages, there's no MACD, there's no Bollinger Bands, there's nothing but what we call a clean or naked chart. We call this naked chart because it has no indicators. All I have is price and time. And from this very simple picture, I can extract literally millions of dollars out of the market by just looking for patterns and price action. Pattern equals trajectory. And so what do I mean by this? So you can see in this time frame, pound New Zealand was crashing. But like anything else, trends do end. And when they end with a pattern that suggests there's going to be a turnaround and a reversal of pattern. And what we saw right here in late 2016 and early 2017 is a double bottom price pattern. This looks just like the letter the letter W, where, let me find, I always struggle to find some level of contrast that, anyhow, the market goes to a bottom, it retraces off the bottom, it retests the bottom. And when it comes through here, we have the letter W. And when it goes through what we call the neckline, which is simply a line drawn through the pattern, that effectively confirms this pattern. So sometimes we see these patterns in the market and it looks like, well, this looks like a W, but it never quite gets up to this line, right? Falls short and then it goes down there. So we see patterns all the time in the market that, the market will throw you all kinds of looks and we're wondering, is this pattern, is this that pattern? But once it goes through what we call the neckline, it effectively confirms. Now you can see in this time frame, it came back. Usually what prices will do, they'll come through the neckline, they'll do a retest. And when they come through again, that's when we know the market is really good. And so this bottomed all the way in this time frame 5 years ago. I'm trading this chart with this 5-year pattern in mind. So every time this thing comes down, I know to buy it because this is what I call the governing pattern. So this is, and it's very apropos today in light of today's NASDAQ, because we see all kinds of moves and they look, enormous. They look like they're real and we're left to sort out what they are. And the way I try and sort it out is I try and determine what is the governing price pattern. And so to my mind, this is my cheat sheet. This is trading for dummies. I feel, and I have felt, and I've said this on every webinar going back years, that this thing bottomed and that every time it looks like it's horrible, I just tell our members, close your eyes and trust the pattern. You have to trust the pattern to get you home. And so you can see in the more recent time frame, we had another double bottom right here. And it actually has a kind of a funny name. This is called an Eve and Adam double bottom, because you can see in this bottom here, it had several attempts at one low, and this one it had a single attempt. But whatever you want to call it, it's a double bottom. It's really just called an Eve and Adam and double bottom. And so once it crossed this neckline, this again was confirmation that this was real liftoff. And I think you will see it there. I don't think that will be an exaggeration. We could come back 12 months from now, and I would not be surprised to see it somewhere at least higher than 218. So we have at least 1,400 pips to go before this next level of resistance. And there's now nothing in the way of this thing. We just took out this resistance recently. And so there's, to my mind, just green sky. So I'm sitting in these positions that I've been sitting in for months. And I'm not sweating it. I don't check in every day. I just am confident that the patterns are equal trajectory. So kind of before I go any further, are there any questions on? So before I actually go a little bit further, so when I open up a chart, and this one probably isn't the best idea because the best example, because it really doesn't look like much. But once I see a pattern, I can understand, then I look for further confirmation to get me in the direction that's indicated by the pattern. So for instance, now the pattern is a double bottom and it says that this on balance is going to go higher. So now I'm trying to join the trade at certain levels where I can get in that trade and understand where to join the trade and also how to assess my risk. So the way I do this is I let the market do all the work for me. Now you'll notice this is a weekly chart. Each one of these price bars represents 1 week in time. So I'm not looking at a 2-minute chart. You can't see this on a 15-minute chart. You cannot see this history if you open up your 15-minute chart. So trading is, understanding the cards that you're holding. And just like anything else in life, if you don't understand the cards you're holding, you're not going to get there. It's kind of like that poker metaphor. If you don't know who the sucker in the room is, the sucker is you. And it's the same thing in trading. It's just, if you don't know your history, eventually the market will, just gut you. And so what I try and do is look at, monthly, weekly, and daily timeframes. And the reason why I look at these bigger timeframes is because I'm trying to extract the bigger moves out of the market. And in order to do so, you need to be looking at these bigger timeframes. So now once I feel like I understand what the governing pattern is, now I look for these individual bars or these moments in time where I can join the trade and understand. And the way I do that is by waiting for what I call an insurance bar. Now, if we're looking on a weekly chart, it'd be, on the weekly time frame. If it's on the daily chart, it would be on the daily time frame. But either way, what I'm looking for is one or the other. I'm looking for and I call these my insurance day bars. So I'm looking for something like this. When I call this a key reversal, and what I mean by key reversal is you can see like earlier in the week, so this is a weekly time frame, market went to a low. By the end of the week, the market closed on the high, and this little slash mark indicates where the market closed. And so you can see in this little example that the market closed at the higher, toward the higher end of the bar. And this is why, even though this was a huge downtrend, when this was making a low, I was shouting to our members, that this was it. You can see when this pound New Zealand made an all-time low, by the end of the week, it closed on the high. This was actually 1,000 pips. This thing rallied 1,000 pips from the low. So despite the fact that it made an all-time low, by the end of the week, the buyers were in control. Now you can see when it circled back in this double bottom, the same thing here. Made a new low, close on the high. Made a new low, close on the high. Made a new low, close on the high. And right there when it closed on that high, I sent out an email. I remember it was like March of 2017. It was around 175. I sent out an email to our members, buy this thing, and it went to 189, 1,400 pips off that reversal bar. So you can see at all kinds of times, made a new low, close on the high, made a new low, close on the high, made a new low, close on the high. So what this tells me is that when I look for, when I see this pattern setting up and then I see the confirmation price action, then I, know it's a green light. And then I layer it by requiring the market to confirm what I'm looking at. So in this case, I would put a buy stop above that high and let the market put me in. So I don't have to stare at the screen and what have you. You can see that in the following week, the market went lower. And then at some point, maybe 2 o'clock in the evening while I'm sleeping, it went through there, triggered you into the trade, and now you're into this trade with no heat. So I let the market do all the work for me. So it's a 4-step process. I look for the trend, the pattern. I wait for my key reversal bar or my inside day bar, which is simply a bar layered inside the other. And then I put a buy stop above there. Denise says, how far back do you need to go to find the governing pattern? As far back as each chart is going to be different. The history is going to be different. And, it's not an easy question to answer, Denise. Each chart is going to be, very distinct and different, in its time horizon. I'm going to show you something now on the stock indexes. And so as traders, we're confronted with a number of these patterns. For instance, right here, there was this perfect head and shoulders pattern. In fact, you saw another one here. Now those are perfect, what we call bear patterns. A head and shoulders, just like what it sounds like. And in that strategy thing, I includes all of these patterns. So a head and shoulders looks just like this. And that is a reversal pattern. So it means that leading up to that, the market's going higher. And then now it's a reversal pattern, means it's going to go the other way. So, in this case, and it was, I run into this conflict all the time. And in fact, this is the conflict I'm having in the stock indexes right now. Which is the governing pattern? Which is the real pattern? So to my mind, this is the real pattern. And everything else is just a fake out. So I kind of understand this. So even when it breaks these necklines and it looks terrible, I'm not going to get caught out. I'm not going to get faked out. And really what I pride myself in is not only the ability to see these monster trades, but keep you guys out of trouble of being tracked. And I feel like today, the stock market may be a bit of a trap. It's easy to get sucked in these big rallies, but it may be a trap and probably is. So again, when you see these patterns, now you're wondering which one is the governing pattern. And the thing is that the market will, the way that question is answered or resolved is the market will tell you. So meaning that if we see a head and shoulders like this, now once I see something, I then have a certain expectation. If I think this is a bear pattern, I think the market should, do that. But, on the other hand, I've learned, that you can't just look at a textbook. It took me decades to figure this out, because I would look at a textbook and say, well, this is your textbook head and shoulders. And I put all my money, in this thing, and then, wonder why I'm losing all my money. So what I've learned to do is really surrender to what the market tells me, because the market will give you, a head fake. So it'll look like a head and shoulders. It'll go there. And then if it starts doing this, then there's something wrong. All kinds of fire alarms go off in my head that, wait a minute, this is not doing what it's supposed to be doing. And then we have what's called a busted pattern, where the implications of this pattern are busted. They're no longer being in force and effect. And sometimes I will trade a market because it's not doing what it looks like it's doing. So if this is a head and shoulders, and then it goes down and starts doing this, I'll buy this just because it should have done this. If it should have done that, but it's doing that. So, this is where it gets a bit tricky, and I don't want to get too buried in the weeds on the first introduction to you. There's a lot of nuance, to trading, but the whole thing is keep it simple. If you understand the patterns, here's a double bottom here, here's another double bottom here, you can make an awful lot of money by just understanding the patterns. What trades are you taking for tomorrow or suggest for tomorrow with earnings reports? So, let me take one thing at a time. Really what I'm trying to do, guys, is get across a strategy. And you guys are trying to fast forward to what trades are going to work tomorrow. And even if I tell you and you make money, what good is it if you don't know why you did that or what led to it? So I'm trying to give you the cooking. If I just serve you the meal, you want to understand what went into it, and then what use is that? So I'm trying to, there's an old saying, give a man a fish and he'll eat for a day. Teach a man to fish and he'll eat for a lifetime. I'm trying to give you guys a way to eat for a lifetime, where you don't need, pundits in the background or analysts telling you what to do. You don't need to go into forums. You don't need to, go into these places where it's not going to do you any good. So the market is the news. People always say, do I trade the news? No, the market is always right, right? The market is always right. Jerome Powell, this economist from MIT, Elon Musk, whatever, they have their opinions. They say certain things, but it's how does the market react to all of these things? So all right, I'm just trying to. So are there any questions about this pound New Zealand trade before we kind of move on? So John says, where would you place your stop loss so you don't get kicked out? So that is a very interesting thing, and the market will do a good job of kicking you out, of the noise. But so it depends, each trade is different. The answer to each trade is different. Let me kind of break this down on the daily. So this is what I was looking at back in, November, when I was looking at these. So this is the daily chart. So once I understand what's going on the weekly, then again, here's an example of how you saw a double top. it kind of did its job. I mean, you had a momentous sell-off from 1,000 to 188. So you made 1,300 pips just recognizing that double top. But this is what I call a counter trend trade. So I will take trades that go the other way, but I'll always be aware that this is the bigger picture, that this is the long-term trade. So what I mean by counter is counter to the main trade. So in this case, this double top put you in this trade. You could have made a lot of money, but frankly, it was, so you can see here's a little inverted head and shoulders, an upside down version of a head and shoulders pattern. And here is a, here is a bigger version of the, so once you kind of see the pattern, now the question is, where do you get in and how do you put your stop loss? So what I do is, again, I use these individual bars to set up trades. So you can see right here, just kind of right there, it made a new low, and by the end of the day, it closed on the high. So what I would do is very simply put a buy stop above that high. I would, require the market to confirm me. So you can see that, the market opens, took a little while, hit there. Now I was put into this trade, and then I would put my stop loss on the other side of this bar. So I would enter it there, and I would enter, so this would be my risk, and that's my reward. And you can see there were many times along this way. Once you understand the pattern, here was another key reversal where it made a new low, close on the high. Then very simply, I put a buy stop above here. I put my stop loss the other side of this. So this is my risk, and that's my reward. And then once it gets going, I will keep adding to my trades. So I call these insurance day bars because they tell me where to join the trade. So I would put a buy stop there, and I'd put my stop loss, maybe down there, maybe somewhere, the other side of the unchanged. But that would be, an example of what I call a key reversal. So a key reversal is where the market makes a new low, closes on or close to the high of the day. And I call this an insurance day bar because this tells me where to join the trade and where to assign my risk. So that's really the holy grail of trading. Where it's going to go, how much is it going to go, in what time frame it's going to go. These are all unknowables, and these we can't control. But what you can control is your entry and your risk. So the other form of what I call an insurance day bar is what I call an inside day bar, where literally, this range, the high and low of this, what I call inside, sits or rests within the previous day. So I call this an inside day. And what this inside day bar suggests is that this thing looks like it's turning, it's going higher, and then it just kind of takes a rest. And what it is, to my mind, it's just building energy. I call this like the beach ball effect, where you place your hand on top of a beach ball and you push it lower and lower and lower, and then you let your hand off. What happens? It just, the energy uncoils. So I use these inside day bars, as a way of assessing something that's going to unleash in one direction or another. And the way I determine that direction is by virtue of the prior trend, the pattern, and things of that nature. And then I will do the same thing. I will layer this trade. It doesn't really matter to me where an inside day bar closes. It can even close at the lower portion. And then what I'll do is I'll require the market to confirm what I'm looking at. So I'll simply put a resting order, a buy stop above the high of that inside day bar. And then I'll put my stop loss under the low. So what happens is, into the next day, this thing goes lower, what have you, and then comes and it triggers me, right? So I don't have to sit, in front of the screen for hours and hours watching it, waiting for some magic crossover. I simply put my buy stop in, my stop loss, and I go and have lunch and I go for a bike ride and I go and have dinner and, I just check back the next day. And then you let the market do the work. So, for all of the market, it could be doing this. And then at the last part of the market, it hits you and puts you into this trade. You don't have to do all that effort and you've got your stop loss behind you. And so you can see that there was a series of times where you had these inside this coil where for 1, 2, 3, 4, like 5 days, you just went back and forth in this very narrow range. So all you had to do was put a buy stop above this range. And you can see in the next day, the market, as it will, gives you a head fake. That's where if you're watching your 10-minute thing, you're probably trying to short it here or do something. And then out of nowhere, the market just takes off, puts you in this trade, and now you're in a 500 pip trade. So to me, trading should be effortless. The market should put you in and the market should take you out. So Steve says, do you only enter if there's an inside day bar? No, I look at the key reversals. You can see here was a key reversal, made a new low, close on the high, made a new low, close on the high. And then there were a bunch of, here was another key reversal. So you could just use these to add to your trade. And then today we have an inside day bar. So today is a perfect example where we had a high low, we closed right in the middle. And if you're super aggressive, now, obviously this thing's gone straight up. At some point, you could, get a fake out here, a little bit of a thing here, and then going back up. So, as this thing gets going, it's going to be noisier. I mean, the volatility. And so this is where you have to keep your stops really wide. And so to my mind, I trust the picture. So this is the pattern. Now, you could have a move back here to the breakout area and then one of these. So if you're putting a 50 pip stop, you could get taken out of a good trade. So once I understand a trade, and I don't really like to advertise it, I don't really sometimes even put a stop loss because I know this is eventually got to go higher. So even if it goes like this, eventually it's got to go like that. So to me, I look at these things when it goes this way as an opportunity to buy that. So, trading is to get in, every trade is different, but it's all about understanding which side of the fence that you should be standing. What direction do you need to be facing in a market? And, pound New Zealand is a market that tells you you need to be, facing north, that this thing is going higher. So RD says, do you do the same principle to short? So I short all of the time. I love going short, especially in the stock market. It's a principle that most people don't understand. So with that, I'll kind of like segue over to this IGV, which I'm short. I'm short by virtue. I bought put options on this thing. A put option is a very levered bet that it's going to go lower. And you can see I bought a put option today, despite the fact that we're going much higher. Now, normally, like I said, you should wait until the market tells you when it's ready to go. But when you're buying options, sometimes it's best to buy it into the action that is actually contrary to where you think it's going to go. So this is the IGV, which is it's like a mutual fund. It's an ETF, an exchange traded fund. And it's exclusively technology and software. So to my mind, technology and software is what drove this market higher and, makes it also vulnerable to go lower. So you can see that last week we made a low right around these areas. So you can see this was a logical area to find support in. And we bounced, and then today it's continuing higher. And when you look at today's action, it's very mesmerizing. It's going straight up. Everything went straight up today. But the question is, will this, sustain? Is this low the low? Do I, is it just going to go and make new highs? And I don't think so. I think this is the case where you have to kind of look at the patterns and understand the pattern. So we had a huge up day today. You could have made money, all kinds of money on the upside. But I'm taking a huge bet that this thing's going lower. And the thing is, I might have to withstand a little bit more heat before it does so. So you can see, these markets create a little symmetry. But what I'm really looking at in this IGV is this pattern here. This, to me, seems to be the governing pattern. Now, look, if the market goes up here and starts doing that, then it will bust this pattern and it'll be a busted pattern. There were all kinds of times where, this looked like a head and shoulders only to make a new high. So the markets give you all kinds of looks all the time. And then you got to kind of figure out, is this real or not? There was a head and shoulders here that I made a lot of money on, but you can see it got going. And then at some point it bust that pattern and went and made new highs. So, this is the trick. The markets throw you patterns all the time, and you got to figure out which ones are live and which ones are not. But I still think that this is a head and shoulders, which is a bear pattern. And so I don't think this down move is over. We had a big knee-jerk reaction today, and we'll see. This will be a discussion we can watch. So there's also another pattern that comes in here. This one's a little bit more esoteric. It's called the ascending broadening price pattern. And it's called the ascending broadening because throughout the pattern, prices are going higher. It starts out the pattern narrow and then widens or broadens out at the top. And actually, I should have been cognizant of this because I think this is exactly where this thing is going to stop, which is a hair above 360. And we're about 355. So I think I was just in my enthusiasm, I got ahead. And what I always say, you should wait for the market to tell you, meaning wait for, the market to tell you when it's ready to go down. So once it goes there, makes a key reversal. Now I understand where to join this trade and where my risk is. By shorting it here, this market can still go anywhere, but that's a whole other discussion. But the point is, I believe that this is still a bear pattern. You have the convergence of a breakout of this ascending broadening, as well as this, head and shoulders. And, this is an example maybe of how the market kind of gets you thinking it's going one way. And then you wonder, well, where did this 1,000, point in the Dow Jones come from? How did this go down? And so you have to understand the patterns that are dictating the market. If you just get caught up in the emotions, this is where you'll get trapped. And so, if this thing goes higher tomorrow, I'll actually just keep shorting into it, which is a bit of a suicide play. But if it works, you can make a lot of money. So, this is the stock market where sometimes, you get these breakouts and then it goes back, and this just ends up being a trap down here. And so, this is where it gets interesting, where the market throws you all these looks. And now you got to figure out, what is real. And, you don't have to be an expert and you don't have to guess and whatever. You can wait. So to my mind, I wouldn't do anything right now. I mean, the market still has some more momentum. But, if the market does this, then I'll know that it's ready to continue back in the direction. So you can see how these markets right here. So once you understand a pattern is forming, so you can see right at the top at this resistance level, this little inside bar. Now remember, this is a weekly chart. So each one of these bars represents 1 week in time. And you can see that bar up there is within the range of that. And you can see that hit the exact upside of that resistance. And then all you have to do is put a sell stop under that inside day bar, inside week, put your stop loss there and look at how much money you could have made. Now you had another key reversal right here where you made a new high, close on the low. All you have to do is sneak your sell stop there, your stop loss there. That's your risk, and that would have been your reward. So this is how I use these patterns and price action to get in a market and understand my risk. Juan says, as a newbie, I'm completely lost. Well, what I would do, Juan, is study that strategy package that I put in there. I'll put the link again. Study it tonight, and then perhaps tomorrow you'll have a little bit more basis. So to me, it's I wouldn't say it's simple. When I open up a chart, any chart, the first thing I should say to myself, okay, what is the phase or the direction of this market? And by and large, this is an uptrending market. But you can see there are all kinds of times where, the markets come up and then they go and when they end, they put on a pattern. So this has been an uptrending market. So up till now, this is a market that you want to buy. You want to get in lockstep with it. Every time it made a key reversal, you wanted to buy that. So when it made a new low, close on the high, all through here, you could have bought this. But now it looks like this thing is turning. And to my mind, if this is an ascending broadening, I kind of understand exactly where it's going to return to, which is there, right at the beginning. So I think that this thing is going back to 270. But what I think doesn't matter. The only thing that matters is the market. So now what I do is I look at what the market is doing relative to what I think. So I set up my assumptions based on a pattern. This is a head and shoulders. And again, a head and shoulders just looks like a man and woman's left shoulder. The peak is the head, and that's the right shoulder. And that is a pattern that suggests a downward move. So you actually saw this thing break out here, and then you saw a downward move. But to my mind, that downward move, if this is real, should continue. So sometimes you break back to the breakout area, which is around 370, and then you go back. And I think that's what could be happening here. So, I really struggle, guys, and I'm sorry, Juan. I mean, some of you are real beginners, and this is just a foreign language. And I struggle where to start because I've been doing this a long time, and I take a lot of this for granted. But it really just starts with an understanding of direction. What is the trend? And then if there's a change in trend, it's usually preceded by a pattern. So we see, either a head and shoulders, or you have a double top. Now, sometimes the tops can be different. This one could be higher. It could be lower. But that is like an M top. And what it says is that once a top has been made, the prices are going to go lower. So a good example of that. So all of last year, I was telling our members, QuantumScape went to 140, is now 20. Zoom was 500, it's now 150. Peloton was 170, is now 20. And Beyond Meat was 200, and it's now 60. I was telling them beginning last February, all of those stocks were going down 50 to 80%, and all of them have. Now, how did I know that? I mean, I don't have any insight. I don't have any special knowledge. I was just looking at the patterns. And then I'll finish off here because, these. So again, I really struggle as to how to simplify these things, but it's all based on observation. And markets make patterns before they go in one direction. And if we understand the patterns, then we can understand how to get aboard these big trends. So you can see this is the ticker symbol BYND, Beyond Meat, this alternative meat company. So you can see here was an inverted head and shoulders. Looks just like a man or woman's head and shoulder, breaks the neckline at $140 and goes all the way down to $40. So if you understood this, you could have made all of that money. Now the market goes back up and puts on a double top. So it looks like the letter M, and also a head and shoulders. So right here, when it breaks through this neckline of $113, I was telling our members it's gone. This thing's probably going to go back to $30. And so that was 120. So we've come down to whatever this was, 50. We're going to have a knee-jerk bounce, but it's going to go back down. Why do I know it's going to go back down? because the pattern tells me it is. Now the question is, how big a rise is it going to have before it goes there? I don't know. But what I'm looking at is anything this moves up, I'm looking at as that is an opportunity to jump on it because it's going to go back down. So once you understand the patterns, and the pattern is going to, occur 2 weeks from now, or in this case, it was, 2 years ago. And so this was, again, an indication of understanding very simple pattern. That is a double top. And you can see in this case, the one peak was higher than the other, but I think we can all agree when we look back now, that is a M top. And so this is an indication of the market just throws you all kinds of looks. But if you can kind of make a sense out of it, and that's what I do, this is just kind of, when it's kind of going back and forth in here, to the uninitiated, it looks just like a crazy bouncing ball. But I was saying up here to our members that it was going down there. You can go look at all of my videos on YouTube going back years. I've been saying, from the time immemorial, from the time Beyond Meat was 200, that this will be a $40 stock. And we basically got there. So how did I know that? It was basically very simply understanding that visual. Now, sometimes you get these knee-jerk reactions against the trend, what I call counter trend moves. But once you understand this, you'll know that this is what's in the cards for something like this. Thomas says, well, beyond go up, at some point, these things need a relief rally. But I think these are all going to be fake out rallies. IGV and the stock market today, it looks mesmerizing. I mean, some of these stocks made 10, 20% moves today. There's huge moves, but it's just because they've sold off so much. I mean, this thing's just gone to crap in a heartbeat. It's gone from 170 to 50. So, for it to go back a little bit is not surprising. You need a relief valve in order for it to kind of go back. And that's really what I think of. I think of markets in terms of energy, right? So, a market's gone like that, you don't want to short it right there. If you weren't there for the wedding, you don't want to be there for the funeral. So what I look at is I look for some kind of, relief valve where it kind of bounces off, builds more energy to go again. And so I want to catch it up here. If it bounces, then I want to get it again. So I have no idea how far this is going to bounce. There was some analyst today put some bullish, price news on it. That's why I was up, 8% or whatever it was today, 8.5%. But it's BS. It's not going to last. So, there's a bit of a trend line that comes in right about here. So maybe it bounces to there, which is 75 bucks. And, if it bounced up there, I'd be on it like white on rice. It's coming down. So, So Duncan, I think there's a discussion about, using candlesticks or bar charts. I like bars because I can see what I'm looking for so clearly. So again, I bought BABA and JD on the close. Really, I say you should wait. You should wait for the market to confirm what you're looking at. But I can see this very clearly. I can see, that very clearly. If a market closes on the high or low, I can kind of see that very quickly. On a candlestick, I can't see it. So you can see that made a new high and closed on the low, and I actually shorted it there and made a ton of money there. So all it was seeing that visual. This made a new high, closed on the low, and you can see what happened. Made a new high, closed on the low, bing. Made a new high, closed on the low, bing. And so to my mind, I just see bars much clearer. What you use, there's no one thing better than the other. But what I look at is pictures. When I open this up, if I was sitting next to a 6-year-old and said to him, well, what is this market doing? Is it going up or is it going down? What's gone from 200 to 60? So the trend is lower. And so, yes, things will bounce, but the trend is down. And so I will just look for ways to get in lockstep with the trend. Now, sometimes I will do a counter trend rally. Like if I see there's a little area to buy this thing to take it to 75, I might take a crack at it, but I'll always know that that's just going to be a short-term bounce, and then I'm looking to get back into the long term. So if you look at the daily today, it does look like a bit of a double bottom. Looks like a funky thing. I've been watching this thing. You know, I've been wondering whether to take a crack at it just for fun. But so you can see there is a bit of a bottom in here. And you can see at the bottom, both these times, made a new low, close on the high, made a new low, close on the high, which led to this. So now you're looking at, you know, a potential funky looking short-term bottom that could translate to, you know, a bit of a rise up in prices, you know, before this thing gets banged again. So, you know, these markets trade and they go up and they go down. I really want to get in sync with the bigger moves. But sometimes these counter trend moves can be vicious, and you can make a lot of money in 1 or 2 days just by kind of getting in at these key areas. And I was thinking of buying Beyond Meat last night, even though I'm very bearish on it, if that makes sense. So you can see here is kind of this long-term downtrend. And so, you know, it's very conceivable that we bounce to 80 and we're still in a downtrend. So, you know, it really depends where a trade is, what the maturity is. You know, there's all kinds of decision-making matrices that go into it. But at the end of the day, it's simply looking at a pattern, this double bottom, and then, you know, just sometimes the way it closes, made a new low, close on the high, made a new low, close on the high. So I'm not shocked today that it's up 10%. So Duncan, thank you for that comment. Duncan says, listen and learn from me. He knows what he's talking about. I've been with him for 3 years. So thanks for that, Duncan. I appreciate it. So Orestes, this is the misconception. You don't need to have an Ivy League degree. You don't need to have a degree from, you know, MIT. You don't need to be an economist to make money in the markets. I'm a moron. If I can make money, I promise you, anybody can. I just look at it very simplistic. I don't try and parse what Jerome Powell's saying and, you know, is inflation transitory or it's not transitory, and make all of these. I let the market make all of those decisions for me. It's all about timing, and the market puts you in and the market takes you out. So, you know, right here, you know, Beyond Meat was in a downtrend. So at this juncture, here was a double top right there. Here was your inside day bar right here. And so all you have to do to get in sync with that trade is, all right, you see the area of resistance, then you put a sell stop there, put your stop loss there. That's your risk and that's your reward. And so I simply try and find these pictures. This is a downtrend, it's a double top, and you try and then join that trade. And it's as simple as that. And it doesn't matter what the instrument is. So when you're looking at a chart, frankly, you should be able to look at this chart now. This could be the euro yen, it could be corn, it could be crude oil. It doesn't matter. You should just be able to look at it and make risk reward determinations. And that's what it's all about, is sometimes it's just making risk and reward. So, you know, sometimes I'll play around with these little areas where it makes a little double bottom, and I'll buy it here. I'll put my risk there, so I have almost no risk, and then I'll kind of, you know, test out to see what it does on the other side. So again, I don't want to dig too much in the weeds. I want to just give you a big picture, you know, viewpoint of just looking at the markets from a visual standpoint. You don't have to understand anything. In fact, understanding is probably contrary to making money. People think, well, you know, I need to read the, you know, the Wall Street Journal. I need to do all this homework in order to make money. I make tons of money by knowing nothing about what I'm trading. So Beyond Meat, I have no idea what its balance sheet is. I have no idea what its earnings are. I have no idea what it's doing. I just am trading price. Cam says, is your 100-day program still on? I believe it is. I don't know, what we do on a sales basis. Believe it or not, I don't look at my business as a moneymaker. I kind of just look at it as a way to give back. I'm looking at these markets every day. I love talking about it. And I make far more trading than I do in my business. So I think I'm going to leave it there. Dave says, how do we know when to get out of a trade? Again, each trade is going to be different. And to my mind, trades end the same way they begin, with a pattern, something distinguishable. So if you get, pattern here and it kind of goes higher, and then you get a key reversal and you get this, and now you get a double top here, this is, again, ultimately a downtrend. So at some point I'm looking for this thing to exhaust. And if I see something, like this, where, you have a double top, you have key reversals, then I will look to get short here and start taking it back down. So trends end the way they start. They will show you. So the market will tell you. You don't have to guess. You don't have to be, all anxious. They will tell you when it's over. Now, it's been a little bit tricky in the stock market because the ranges are just so enormous, 5% a day, in this one area. So you can see, at certain areas, it can get very dangerous. But Friday actually told us we were going up. You can see that we made a double bottom in here. And then we had these two where you made a new low, close on the high. And then, this one where you made a new low and close on the high. So you could see that, today didn't come out of nowhere. But now the question is, if you're trading this thing, what do you do with this? And to my mind, the bigger pattern still tells me this thing's coming down. So this is the NASDAQ, the triple Qs. And so to me, this is the pattern. Here was a head and shoulders. This whole thing is kind of like a double top. And sometimes what you do is you come back to the breakout area. But I think you're coming back down. So I would not be mesmerized by this. Right now, the Qs are trading about 100 lower than where they closed. So they're down in the aftermarket. I'm watching it right now. But, I think that, you could go up tomorrow and then still fail and look something like that. And now you're going, wait a minute, why did it do that? Well, it did that because to me, that was what. So we'll see tomorrow if I'm right or not. And then, if it goes like this, I'm going to lose a lot of money. Actually, I'm long JD and BABA, so I'm going to make money either way. So I'm not going to show any other charts today. We could, go into millions of charts. I wanted to kind of give you an introduction to a way of thinking, a way of looking at the markets that doesn't depend on you being an economist or, have a degree from MIT. I just look at a simple pattern. And so you don't have to guess, just wait for the market to tell you. And if I'm correct, the market should do one of these. And then it's over. And then it's going to go back down in that direction because this will have told you. The pattern and then the price action will tell you. So you don't have to outthink it. Like tomorrow we could open lower, all of a sudden push higher. You're thinking, wow, this is going to the moon. And then by the end of the day, it's down here and you go, wait a minute, how did that happen? Well, it happened because of that. So let's see if I'm right tomorrow. I'm short these IGVs, which means I'm betting that the market is still going to make a new low underneath this low. Now, it could take 2 weeks to get there. It could still do one of these and then roll around. It could look something like this on this side. And so, it could do something like that and take 2 weeks to get there. But I think we're going back down. I could be 100% wrong. And that's, and if you're wrong, you just get out. Sigmar says, thank you ever so much for sharing this. You are welcome. So tomorrow I will talk about risk management. I'll talk about how you trade and how you position size, because that's, as important. Everybody thinks, if I just get in at the right place, that's how to make money. That has nothing to do with it. If I lose, on 5 trades, in the next week that I'm talking to you, I don't care. I'm long pound New Zealand. I'm up 1,200 pips. So what do I care if I lose a buck or two on JD or BABA or this or that? So yes, it's the same time as tomorrow, 4:30 Eastern time. Zeus says there's a lot of conflicting. Let me see what you said. Let's see. There are many conflicting patterns in one chart. Which one should be trusted? Well, Zoo, that's that's what took me, many decades to figure out. So if you get it in the first, 2 minutes, I'll be but, so here is the thing. The market throws you a couple of looks. So this is a market that's been going up, and every dip, has resulted in a new high. And I think this is the programming, that this was a dip and now you got this bounce and everybody's excited now that it's going to go back there. And this has every ingredient that normally I would look for of a bottom. And maybe I'm so kind of not looking at this thing properly that I'm not seeing it, because this looks like a bottom. It has a, bottom, and it has these 2 key reversals. But to my mind, this is the market throws you a bunch of traps. And so to me, this is, so you can see there's a big head and shoulders here. So to me, these are the guiding patterns up here. This is a misdirect. Now it's a huge misdirect. I mean, it's gone up whatever, 5, 6, 8% from the bottom. But I think it's just a misdirect. It's, to suck you in. And then you wonder, how did it get down here? And now you've lost all your money. So what I look at is this. Now, if the market starts digging in and starts doing this, then eventually, I'm going to say, you know what, this is just another stop along the way of this rampant bull market. So, at the end of the day, the market is always right. And you have to just, watch what the market tells you. And so this is a very tricky area. You're between a kind of an upper resistance level, you're in a support level, and you're kind of like in between. So it could go up there and then down, it could go down there and then up. And so this is where, and the size of the bars, so the size of the volatility now, we've seen the most extraordinary volatility. This was the biggest sell-off and then recovery since 2008. So if you're wrong, you're really going to get your hat handed to you. So this is where a little bit of discipline comes in, and you should just wait. To me, I'm going to keep selling in this thing. This thing keeps going higher. I'm going to keep buying more puts. It's a strategy where you could really get hurt if you're wrong. But I feel that this is still the guiding pattern, and that we're coming back down. But there could be one more push higher. So we'll see you tomorrow. That's part of the fun. So Dave says, would I buy on retracement? No, I wouldn't. So Juan says, I can only do longs, no shorts. Well, that's kind of a problem. A lot of these brokers will lock you out from doing what I call inverse ETF. So sometimes you can, if you want to go short, there's something called an inverse ETF, where the SQQQ is the opposite of the QQQ. So if you think the market's going up, you would buy this. And actually, when you look at this thing, it's pointed down, which means the market is going up. So you can see there was a big double top here, which told you that today we were likely to have a follow through. So this is the opposite. So when this goes down, it means the market is going up. And frankly, when I look at this, this looks pretty bearish. You have this double top. And so this suggests this thing's coming down, which means the market's going up. So, we'll see. And so tomorrow, so what I do is I look and see how something closes. Instead of guessing what it does, you don't have to trade tomorrow. Wait and see. If it ends on the low, then this thing looks like it's going to go lower and the market will continue going higher. What I did, and I don't want to spend too much more time, I could go on and on about these charts, is that I waited for the close and then I bought JD. This is something I made a ton of money on the options in the last webinar. Again, here's a huge Adam and Eve double bottom. Here's another double bottom. Then we came back down, and now, so when I saw that this thing's kind of breaking back in the direction, I just bought this on the close. I waited, I bought it on the close. This will be my risk. And, I'll see if this thing keeps going up. So I bought JD on the close. I saw it going up all day. I could have bought it all during the day, but I just bought it on the close. And typically what I suggest is that you should wait and then confirm it. So what I would say is put a buy stop above the high, which would then require this thing to confirm that this thing is still going up. So, this thing could open lower tomorrow. And then if it triggers it, now it kind of confirms that the momentum is, what you think it is. I just bought it here and it could just open tomorrow and then look like that by the end of the day. So I kind of jumped the gun. But you don't have to. Wait for the market, put your buy stop there, put your sell stop there. That's your risk. And that could be what you're looking at as an upside. So the markets are in a very confusing stage right now. So you need to be very crystal clear about what you do. All right, Adrian says, excellent webinar. I don't know if it was an excellent webinar. I feel like there's a lot of things going on, and I don't know if, this is clear to a lot of people that, have never, understood this aspect of trading. And I'll try. We have 4 days together. Hopefully we'll keep breaking apart these things, looking at things. I look at everything the same. Gold, oil, JD, the markets. Sometimes the markets are much clearer. You can see because of the chaos in the markets that things are, extraordinarily volatile. And so, you can make a lot in these times. You can also lose a lot. Thanks, Tyrone. I appreciate it. Dwight, thanks very much. I'll see you guys tomorrow.
All right. See you tomorrow, Mark.
Thanks, Dwight. Thanks, buddy.